Mortgage rates, housing inventory, and home prices. These are the three biggest topics that I hear every single day by day from buyers, sellers, clients, referral partners, the whole nine yards, right? And it's also the most misinformation I see right now on social media and mainstream headlines is that, real estate's crashing, mortgage rates are high, all this type of stuff, and there's not a lot of real data behind these news articles and from experts that I'm seeing on social media. And so I wanted to share with you guys some real data on the United States mortgage and housing market today as we're at halftime right now. Today's July 1st as I record this, and it's wild that we're already halfway through 2025. But I wanted to give you kind of a summer market update so you can educate yourself, whether you're buying a home or maybe selling a home, or if you're just a homeowner and you're looking for more education right now. This would be a great video for you. So let's dive right in. A couple weeks ago, we had the June 2025 Fed meeting. Shocker, they didn't move rates, right? They kept rates unchanged. And the reality is that, the Fed is moving with caution right now because of the tariff situation. They don't want to cause, more inflation. We have to keep an eye on that if we lower rates too fast. And the wild card also is the Israel-Iran conflict situation right now, right? We don't really know what's going on there. We don't know right now with the Iran bombing situation that happened, how is that going to affect the market? And I'm keeping a really close eye on this, and I'm going to put some content out on this later, so spoiler alert on that. But we still are expecting two rate cuts by the end of 2025 based off the data. And the data I like to use is the CME group. This is taking Wall Street traders, investors, and just the overall odds of future Fed rate cuts. And so right now we have a 19% chance of a quarter point rate cut at the July meeting. So these are the meeting dates on the left. But we have a 78% chance of a quarter point rate cut on the September 17th meeting. And so it looks like the fall is when the Fed is planning to move towards lower rates and starting to cut rates again, right? I like to look at real estate mortgages on a longer period of time. I think if we look intraday, it gets a little bit too dicey. But if we're looking at next year, right, a year out to June 2026, we have a 75.7% chance that we would be 1% or 1.5% lower on the Fed funds rate. Now, what's actually happening though with mortgage rates? Mortgage rates are actually different than the Federal Reserve rate, and they're not the same thing, right? So mortgage rates actually move ahead of what the Fed does. The mortgage bond market is what actually moves mortgage rates. And so there's four arrows on the screen. This is a 1-year chart of the average 30-year fixed mortgage rate in America. And I took this screenshot this morning. The first arrow here in September, this was the first Fed rate cut in 4 years. Mortgage rates did the exact opposite. We saw rates shoot up during the election period timeframe, back above 7%. And then the second arrow was after Trump came into office and started bringing all the tariffs into play, right? And we saw a big move down in mortgage rates over a matter of a couple months. And you probably remember when the Dow Jones and the S&P 500, the stock market was crashing four, digits, 1,000 points here, 1,000 points there. What happens is when money is leaving stocks, it goes into bonds, which mortgage bonds is a safe haven asset, and it drives interest rates lower, right? And so that's what was happening earlier this year. Then pause on tariffs, right? Complete halftime pause on tariffs. Mortgage rates shot back up above 7%. And then the graph I'm going to show a little bit in this rectangle here at the end. This is a live time, what we're going through the last 30 days. We are seeing mortgage rates fall off a cliff and kind of plummet here. Might be a little bit of a strong word, but we are seeing rates come down. And right now, as I record this, about 6.6% on a 30-year mortgage. And so this is a good sign for home buyers because usually when rates move down, it takes 6 to 9 months for the market to digest that. And so there is a window where rates are coming down, but it is still more of a buyer's market right now as we speak. But here's the thing, and I don't see a lot of people talking about this at all. All I hear is high rates, high rates, high rates. But if you actually look at this chart, we stretch this over 5 years, we are in a downward interest rate cycle right now. I'm going to repeat that. We are in a downward falling interest rate cycle as we speak, and nobody's talking about it right now. We had a peak of 30-year mortgage rates October of 2023 at 8% interest. Yes, 6.6 is higher than what it was, but we are in a downward slope right now for mortgage rates over a year and a half. And it may look like a little bit of a roller coaster ride at Busch Gardens or Universal Studios or whatever, but we are in a falling rate environment as we speak. And so the question that I think a lot of people are thinking or, is ultimately up in the air right now is why are buyers on the fence? and maybe common sense, but when we think about affordability right now, that is a reason. But there's really two things as to why home buyers, from my conversations with hundreds and hundreds of clients this year, they're waiting for rates to drop or they're waiting for prices to fall. Or maybe a combination of both, right? Because some people want everything, right? They want to have their cake and eat it too. But anyways, they're waiting for prices to drop or waiting for rates to fall. And if we actually look at the real data on this, do they actually know what they're waiting for? And so I'm using an average of a $750,000 home in these two scenarios. But on the left side, we look at waiting for rates to drop, right? $750,000 home, 20% down payment, a 6.6% rate, which is today's rates, at $38.40 a month, versus a 5% mortgage rate, which is what everybody is waiting for. The statistics show that most home buyers are waiting for rates to go to the fives to buy a home. Well, the monthly savings on a $750,000 home, and this may be a larger home than your market if you're watching this, but down here in South Florida, so that's the average, around the average of a single family home here in South Florida. The monthly savings are $619 a month, right? And I'm not saying that's not a lot of money, but what I'm saying is I talk to a lot of clients, I review their assets, I review their bank statements, what's coming in, what's going out, and a lot of people are spending $600-700 a month on car payments, credit cards, Uber Eats, doing things that are discretionary. And if you really want to become a homeowner and make homeownership happen, there are some internal tweaks you can control right now to make a better decision and afford homeownership right now without having to wait for rates to drop. When rates do drop, we're ultimately going to see more competition in the housing market, right? Now, the other thing is waiting for prices to fall. So what would happen if a $750,000 home went down 10%, right? And you could buy that same home for $675,000. And I will say that right now in today's market, I'm seeing some clients be able to do that, but year over year depreciation of 10% is not happening in the United States of America housing market. But let's say it did, right? And we waited for 10% price depreciation. The $750K home, 20% down, 6.6 versus $675K home, 6.6 is a difference of $384 a month. So it's even less than the rate conversation, right? And I see a lot of people like, oh, these home prices are too expensive. I'm going to wait for rates to come down, or I'm going to wait for prices to come down. And they don't actually realize that it's not as big of a deal as maybe they think it is. And again, I'm not discrediting $300 or $400 a month. I'm not discrediting $600 to $700 a month. But when I actually look at buying and consumerism activity in most people's bank accounts, they can afford the $300 to $600 a month differential. So just something to think about when you're planning on buying or selling real estate right now in today's economy. This is from Danielle Hale, from Chief Economist from Realtor.com. I thought it was a great quote that was recorded a month or two ago. The number of homes in the United States for sale is rising in many markets, giving shoppers more choices than they had in years. Sellers are becoming more flexible in pricing, underscored by price reductions we're seeing, while mortgage rates are certainly weighing on demand. The silver lining is that the market is starting to rebalance, and this could create an opportunity for buyers who are prepared. Now this was recorded back, this was from May. I am seeing the opportunities for buyers who are prepared right now because they're able to strike on, when the iron's hot and when properties come up that sellers are motivated and need to get out, they're getting great deals and great concessions in this market right now. So the second part of this is inventory, right? And I'm seeing a lot of news on inventory rising, and it's kind of like a Chicken Little approach. The sky is falling, right? And if we look at the last 5 years, this chart can seem a little bit scary. I'm not sitting here to say that we don't have more homes on the market, right? We have more than double homes since 2021 in the market. But you want to guess how many homes we had in the peak of 2008 when real estate went down double digits? There was over 4 million homes on the market in 2008. And so we're still at 1/3 to 1/4 the amount of inventory in the United States today than in the peak of 2008 when we saw real estate actually depreciate. And you also couple that with the fact that, okay, we have more U.S. citizens and more population growth right now. And let's go into stretching this out inventory in a 10-year period, right? Just pre-pandemic, we're still not at pre-pandemic levels in all markets, right? This is on the U.S. average. We're still not in the pre-pandemic levels. We are in some markets, but we're still not in a position where there's an influx supply of homes that would cause a depreciating housing market, right? The other thing that not a lot of people look at is household formations versus housing starts. So new households being formed versus new building permits and housing starts coming up with builders building homes, we've been in a 7-year deficit in America right now. And it is a cause for, why we're not seeing home prices depreciate either, because there's still a lack of the amount of homes comparative to new houses being formed, right? And this was from realtor.com as well. At a 2024 rate of construction relative to household formations and pent-up demand, it would take 7.5 years to close the housing gap right now. And I think that it could probably be a little bit less, maybe 3 to 4 years or less, but maybe not 7.5. But we still are at a housing gap right now where there's not enough homes for the amount of buyers that want to buy in America right now. And so the last thing is, on inventory right now, price reductions and what's actually happening with home sellers. And so 8 in 10 home sellers right now, according to realtor.com, think that they're going to get their asking price or more than asking price. But when you actually look at the data, 4 in 10 sellers sold for less than their asking price. So 44% sold below asking, 28 at asking, and 27% above asking, right? And so the data is showing that sellers have unrealistic expectations. Now, somebody might come for me on that, but the point is that it's not the same market it was a few years ago. And there is a gap right now between what sellers are willing to sell and what buyers are willing to pay. And this is normal, right? It takes time and months for the market to catch up with one another. But if you look at price reductions, we have 1/3 of sellers that actually had to reduce from their asking price. So 1 in 3 sellers had to reduce from their asking price. 21% had 1%. But overall, we're seeing a market right now where sellers are over, the listing price is having to get reduced because it was overlisted. But does that actually mean that it is the home values are depreciating year over year? Two different things. Deceleration of valuation versus depreciation of valuation. Two very different things. And right now in America, we are not seeing year over year depreciation across the board, but we are seeing a deceleration with more price cuts, which again is an opportunity for buyers no matter where you're at in America right now. This is a chart of America showing the price reduction surging May from 24 to May 2025. Down here in Florida where I live, we're at 24% in price reduction. But overall, this is good. We are rebalancing to a healthier housing market where it's a neutral ground where buyers can negotiate. Sellers are not getting everything they wanted like they used to. And it's just going back to a median point of where we need to be, right? So sellers are pricing high based on comps from past rather than current demand. Today's list price growth is accelerating while sales price growth is decelerating. But back in 2020, both were accelerating. And so again, if I can summarize this last piece here into one chart, it would be this. And we go over a 5-year period. Recently here in the last couple of months, there has been a gap different than the last 5 years of what the median sales price versus the median ask price. So in the green right here, median sales price is lower. So what homes are actually selling for versus what homes are actually being listed at or the asking price, right? And so there's a gap between what sellers are wanting to sell and buyers wanting to pay. Eventually we will see this come back, but this is what's happening in the summer in the United States right now is that gap. And so what I would say right now to home buyers is that there's opportunity right now. What I would say to sellers is that you need to have a great real estate advisor to help advise you on selling your home, pricing your home right, and making sure that you're actually selling for what the current demand is, not what past demand is. And so the last thing I'll keep it at here is that if you yourself are looking to buy, looking to sell, or have a home that you just need help with planning for future wealth creation, happy to help have a one-on-one on this. It is a confusing housing market. There is a lot of uncertainty. I'm not sitting here saying that you should feel 100% certain, but I wouldn't be super scared about where the United States housing market is heading over the coming years and decades. I would look at it as right now we are in a rebalancing in the United States. So I hope this helps. I look forward to staying in touch with you and have a great rest of your year.